Hey, my name is James Nicholson. Welcome to my YouTube channel. We've got some big updates on mortgage rates this week. In fact, a lot of mortgage rates have dropped. I've got a big lender that I want to share with you that's dropped rates in two of their products as well. This is the second time they've dropped in the last few weeks. And we'll talk about what's happening with the majority of the big six lenders as well. Are they moving up, down, sideways? What's going on with those? Now, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. If you have a look around this video, we are so close to 50,000 subscribers. That's a massive milestone and I'd love to hit it sooner with your help. So do subscribe, and by subscribing, you'll get all the latest house price news, interest rate news, property investing tips, and much, much more. And let's get some views on this video. Your part's simple. All you need to do is smash like, tickle like, do something to that like button. That helps with the YouTube algorithm, and that really has helped the channel grow. So thanks to everyone that does that. So it's been a strange time. So in August, obviously, we had the Bank of England cut rates, which was good. But since then, mortgage rates haven't really come down. In fact, a lot of places increased their mortgage rates. And that's because the lenders, they borrow on a rate called the swap rate. They don't borrow from the Bank of England. They borrow from bigger banks, and it's something called the SONIA swap rate. Now, there was a lot of uncertainty. So the Bank of England cut rates in August, but then they came out and said, wow, inflation is going to be much worse than we were expecting, and it's going to go above 4%. Before that, they'd forecast around 3.5%. And so the swap rate is based off where they feel interest rates are heading. And this, to them, meant that they felt that interest rates aren't going to come down as quickly. Now, you've also got another wrench in the spanner, because the Americans have cut rates now, and they're saying that they're going to cut at least 2 more times this year. But then you've got a problem over in America at the moment because the government is shut down. And so the Federal Reserve need data in order to make decisions. And right now, they're not going to get inflation data because the government's shut down. They're not going to get the unemployment data as well. So it's unsure if the Federal Reserve will keep cutting rates. Now, they did get some private company job data this week, which showed that they're actually losing jobs, 50,000 jobs, and a revision last month that they lost around a similar amount as well. And so maybe that's enough for the Federal Reserve, but we don't know. It's not good having a shutdown because they're kind of steering blind here. And so because of that, mortgage rates have been a little volatile in the UK. And so since the Bank of England, as I said, they've gone up. But what are they looking like this week? Well, this data is from Uswitch, the comparison site. And so Uswitch is saying that it is slightly better this week. And so this week, the 2-year average, so this is across all of the lenders that they cover, which is hundreds and hundreds of lenders and hundreds of products as well, that the rate went from 4.81% as an average to this week is dropped to 4.75% as an average. So not a huge drop, but it's definitely better. It's moved in the right direction. Now, that's more likely because the outlook for the economy doesn't look great. We keep getting revised figures in the UK. It's just not growing. And unemployment is expected to rise because Labour's going to clobber us with huge tax rises in the budget next month. And so a lot of people have just got a little fear about what's going to happen next month, including myself. I don't think it's going to be massively positive. And I think we should do something to stimulate the economy. Before Labour, I've had businesses since around 2003. I bought my first property in 99. I had an iPod accessory business. And I recall Labour being in power and cutting the VAT from 17.5%, which it was for ages, down to 15%. That was smart. That got business moving. But this time, they're looking at increasing taxes. That means people are going to have less disposable income. So they're going to spend less in restaurants, less in bars, less in retail shops, because they just won't have that money. And that's a real problem, in my opinion. So what about the 5-year deal with Uswitch? What's that looking like? So this is the 5-year average as well. And so last week it was above 5%, 5.03%. This has also dropped to 4.99%. So that's average deals across the board, improving. Not enough, but improving. That's cool. So what's next? Well, most of the lenders this week have just kept rates the same. I'm talking Barclays, I'm talking Halifax, I'm talking Nationwide. There's not really been much movement this week, but one lender has cut, and they cut last week as well, and that's HSBC. And so what they're looking at here is the fact that they're saying, look, the market's slow. The market is slow. I did a video yesterday, I think you would have watched it, where I talked about mortgage approvals were down. And that's because less people are applying for mortgages at the moment, because a lot of people, including viewers of this channel, are just waiting and seeing. They want to know particularly what's going to happen with stamp duty. So lenders at the moment, if they're cutting rates, it's just to get more business. They're reducing their margin to get more business in. And that's what HSBC is looking at doing here. And so they've cut their 2-year deal from 3.89% down to 3.84%. So not loads, but a little bit of a drop there. Every little counts, as Tesco's would say. So that is important, that they're moving that in the right direction, and that will get them some more business, and it could be good for you. Now, the 5-year deal has also come down. I'll talk about the fees in a second. So last week, the 5-year deal was 4.04%, and they've dropped it to 3.99%. That's important because that psychologically, for a lot of people, under 4%, that gets you the publicity, gets media coverage, gets advertising for them. That's what people want to see. And so the next big milestone will be when someone gets to 3.5%. It's been a long while since we've had some deals that low. What about the fees on this? Well, the fees on the 2-year deal and the 5-year deal are both 999. So obviously, if you split that over 5 years, it's a lot less than it is on the 2-year deal. So look, lenders, they're just not moving at the moment. They are also in this period of time where they're just saying, we need to see what happens here. And that's what the goal is here, to just see what happens in the market and get some predictability back. What I think will happen is, leading up to the budget, we've already had some leaks. We've had a leak that they're considering a property tax, where houses above 500 grand, you don't pay stamp duty, and you would pay a property tax on an annual basis. And they've also leaked that they're considering having stamp duty in instalments to get the market moving as well. So those 2 leaks are out. I think you'll get more. And I think you'll get more leaks closer to the budget on which way they're leaning. If they're considering anything else, we'll hear about that. But if they're more likely to go with the stamp duty in instalments, we'll hear more about that as well. So that'll be interesting to see how that goes. So last thing, as it's payday weekend, we're doing a flash sale again on the fundamentals of property investing. It's just £20 today. In the description, you can grab a copy of that. Why would you grab it? Well, it can teach you to find property below market value, how to get off-market deals. Not every property is listed on Rightmove. We'll teach you how to add value to those properties. That's important as well. With refurbs, new bedrooms, all of that stuff is important. So that's one thing we'll teach you. And then we'll teach you how to cash flow that property. It's a one-time cost of just £20, which is crazy. I'm going to link to it in the description and in the first comment. So grab a copy of that. Till Sunday at midnight, it will be just £20, and then it will be going back up. Do make sure you subscribe to the channel as well. Let's get that 50,000. And check out all the other content as well on the channel, including this video right here.